Good afternoon, everyone. Futures Brizio here, 1:45 on Wednesday, December 18th. Hope everybody's having a great day. And as always, make sure you smash that like button, subscribe to the channel, and any questions, comments, leave them down below. Okay, so just a quick update on a couple of things. So I've been basically making two sets of videos lately. One on using Forex retail sentiment to basically trade against the crowd. I'm not going to rehash it all, but again, since most traders lose money, what should you do? You should trade the opposite of how they're trading. And fortunately, we have nice websites like this one that will give us that information. And again, I'm not promoting this website. There are other ones. I just like this one because it's very easy, and I like what it shows graphically. It's very easy to use. You don't have to sign up. You don't have to give any information. You log in. You use the site. Perfect. So, anyways, I did make a video last night on a couple of these possible entries, and I did want to just bring you up to date. I did take a couple here today. So this is the pound Aussie, and again, if we go look at pound Aussie, what do we see? So here it is. So you can see the market is heavily net short this market. I mean, as of today, they're 82% short. You can see that up here. Okay. God, every time I roll out of this. Okay, you can see right here, 82% short, 18% long. So with that being said, how do you want to trade this market? Well, you want to trade it long because 82% of the retail traders are trading it short. And you can see during this entire time when the market has been at least 40%, 40% long, or I guess in this case, yeah, 40% long. You can see the market's been going up ever since then, and it just continues. They continue to add to their long positions. We go down, down, down. You can see, excuse me, short, God, adding to their short position. So at this point, they were only 40% bullish. Now they're down to 25%, or 18% bullish, and so the bearish positions, you can see this pink area continues to deepen and grow. The price has just gone up completely opposite. So it was called a divergence between the actual price and the retail sentiment, the herd mentality. And so with this market, and again, these are daily candles. The last good entry point was back here a couple of days ago, 3 days ago. But I got in on a shorter time frame on a 1 hour chart, but I was looking for longs. So this is the weekly chart actually. So if we go down to the 1 hour, you can see where I got in right there. On that little pullback right there, I had that little yellow line. Actually, I think it might have even been a shorter time frame. So here's the 30-minute, or you can even go down to a 15. And you can see we had this pullback, which led to this high. Then we had this pullback. You can see price wicked right through it. Very typical liquidity sweep. Anybody that was long had their stop sitting right here. They knocked you out and then went higher. So I'm going to hold this. I do have a take profit sitting at the weekly high. Oh, that's why I was on the weekly chart. There is a major area of resistance up here. So I generally am a little conservative as far as like how deep into that area I'll go. And so that's where I have my take profit. So hopefully we get there, and I'm just going to hold on to this. But trade was strictly based on initially looking for the trade based on the retail sentiment, and then waiting for a good area in the market, a market structure area to get in. Now, obviously, like I said, if you want to get the best entry, then you can follow the daily chart and wait for these pullbacks on the daily chart. And, that means back on the 15th was the best entry. If we go back to, let's go back to the 15th. And here's that pullback on the 15th, right? Here was the previous swing down here, right? This was the previous swing low that was put in around the 10th of December. Price went up, made this new high. And then this is that daily candle, okay, that proceeded on like the 14th. And then here it is on the 15th. Boom. Price comes back. Okay, this is again the hourly chart. Price comes back, takes out market structure, takes out this little structure, takes out this structure on this wick, then we pull back a little, and then we just go. So anywhere in here would have been the ideal entry. Obviously, I did not get an ideal entry, but nevertheless, I still think that, just based on the sentiment, that it will go higher. Okay, so that's that one. I think the other one, yeah, I'm in the back in the Kiwi yen, and again, if we look at the New Zealand dollar yen sentiment chart, which is right here, you can see again now the bullish sentiment is beginning to drop a little, so that, if it gets down below 60%, where this line continues to drop, and I get down below here, then I probably will pull the plug and not go short anymore, because that means it's starting to balance off. And again, I look for at least a 60-40 ratio, so I may not stay with this trade longer. It depends what this does. But in the meantime, we have been trading down. We had this correction. We had this bearish engulfing candle yesterday. Today we are down, although it's off the lows, but it's still down. I think, or is that yesterday's candle? Let me just refresh the page, guys. I'm sorry. Yeah. So I didn't refresh the page. So we're down again, and we are on the lows for the day. So I do think, and you can see the sentiment is actually, sorry guys, after I renewed refresh the page, I forgot to refresh it before I showed you. You can see the bullish sentiment is turned a bit higher again. So we're back up to 67%. So again, price is still diverging against the sentiment. Let's see. I think that's the only ones I'm in. Yeah, those are the only two markets I'm in right now. But like I said, guys, I just wanted to remind you about this. So some of the other ones are like Aussie Swiss. So if we look at Aussie Swiss, so we're still 80% long here. Although the market is off the lows for the day on the Aussie Swiss, we did have this correction. We had this big bearish engulfing candle. Actually, I got to refresh this. See what we are today. Yeah, so we're still on the lows today. Sorry, guys, I really should have refreshed these. Okay, so this continues to bear out. Canadian Swiss, all the Swiss pairs except for the dollar Swiss are pretty much the same way. Let me refresh Canadian Swiss. Yep, same thing. Okay, so you get the point, right? So again, it's very easy, guys. You just go to this website. If you want to look for any pairs that have at least a 60-40 ratio, long to short, short to long, at least 60-40 or higher, where that 60% number is 60 or higher. So 60-40, 70-30, 80-20, whatever. As soon as it gets inside of below 60, like 55, 45, 50, 50, 58, 42, whatever, then you just want to ignore those. Just move on and don't bother. Okay, because A, there's plenty of opportunity, and B, unless you have that extreme divergence in the sentiment, it's not the best way to use this. Okay, so that's the best way to use it. So we've got Aussie Swiss, Kiwi Swiss, New Zealand, all the Swiss pairs again, basically except for the dollar Swiss, because that's much more heavily influenced by the dollar. We have this going on. Look at, Kiwi Swiss continues to plummet 90% or 89% longs, and look at the price, right? I mean, you can't look at that and not be able to come away from that and say, wow, that's pretty powerful. So it's not a magic bullet by any means. You still have to enter at the right time. You still have to use your market structure and price action to figure out when the best time. You don't want to buy on a low, or sell on a low here. This is not a good place to sell this, right? Price is at the lows. It's at a previous low here. So you don't want to sell it right here. You want to wait for a pullback. Now, if you wait for a daily pullback, that's fine. The problem is with the daily is, this right here on this correction. So price was going up, right? Well, so you see this bull candle closes, and then the next day we close lower with this bearish candle. But you want to try to get in somewhere in here. You don't want to wait and then again sell at the low. I mean, that would have worked out because it went down again today, but you want to preferably get in somewhere during this candle. And so how you do that is on a shorter time frame. So this bull candle was on December 15th. So if we go to the Kiwi Swiss chart, which I have here, let's go to the daily. Now let's zoom in so you can see this. So here's that bull candle that I just showed you from the 15th, right? And then the next day we come back with this one. So if we go down here, and let me just drop a vertical line on this candle. And now let's just go down to like a 4 hour. Okay, we got to adjust this. Okay, so there's the peak of that bull candle. Okay, let's go to the 1 hour. We'll refine this again. Okay, so there's the peak of that bull candle. Okay, so where was the last pullback that you could try to get into? Well, I say it's right here, right? We had the market come up, make this little pullback, boom, shoot up. So anywhere below these lows right here, you could get in. Now, so there was a break of structure right here. The price did pull back, very typical, and then it collapsed. So if you got in here, you know, it's not a bad fill. I know some people say, well, wait for the pullback. You don't always get it, though. Sometimes if it's really bearish, you might get one little push and then it goes, but whatever. Whether you got in here, put your stop up here. I'd put my stop up above here no matter what. So either way, I would have been safe on this. Okay, price did pull back, so you did go into a little bit of drawdown here. But, you know, again, you can wait for the pullback, go to an even shorter time frame if you want to, you know, look for a shift in this bullish momentum on this little pullback. So again, the market's fractal, but whatever you want to do, this is what I'm saying. So you look for that shift in market structure back down, knowing that you're looking for shorts. And instead of getting in way down here, okay, so that was on the 16th then that price went down. All right. You know, so instead of getting in like down here on a bad fill, somewhere down here, you know, you got in early on and, you know, you maximize this and you'd still be in this short. Okay. So that's what I'm saying. So all you got to do is just look at these, find the ones that have these clear divergences, again, at least 60-40, 40-60 or better. Wait for pullbacks. And when you start to see the daily chart pull back, you know, you want to get at least a couple of candles, but it might go on for more. Like here, you basically had 1, 2, 3. You basically had 3 bullish days up, but it never took out the previous structure over here. It, you know, it wicked out right up here and then it went down. It kind of chopped around for a while, but it did eventually go down. Here you had 3 candles and then a doji, so this was definitely your sell day right here. And then on this one again, I just showed you, right? We had this bullish candle closing at the highs, but the next day we started selling off. So inside of this daily candle is your entry. Okay? So I just look for, you know, the daily. I look at the daily chart. I wait for pullbacks. Again, at least a couple of candles. It might go more, but, you know, on average, well, it depends on the pair. You know, some pairs are going to have much deeper, more, you know, kind of violent retracements, and other ones are going to be much more gentle. So this pair, you know, looks like it averages, you know, anywhere from 2 to 4 pullback candle, daily candle. So for a couple of days, you're going to have the market pull back. You got to be patient. Wait for that shift on the lower time frame. Whether you use if you're looking at the daily, I'd suggest going down to at least the hourly chart, maybe even a little lower, maybe a 15-minute. I wouldn't go too much lower than that. You start really splitting hairs at that point, and, you know, you're seeing a lot more noise. So I'd say between the 15-minute and the hourly chart is pretty safe if you're taking your initial analysis off the daily, which is what this is. All right. So again, those are the ones that I was looking at as of yesterday. I just wanted to update you on a couple of them. Again, just being those 2 that I'm in now. These were all good trades, though. The Kiwi Swiss, the Aussie Swiss, CAD Swiss to a little less extent. The Canadian dollar was a little bit, can affect those pairs a little bit more. But they're pretty good. You know, and let's see. I don't know if that, let's look at the Aussie yen. I had that one originally, but let's look at Aussie yen. Yeah, Aussie yen, same thing. I mean, the thing is with Aussie yen, you got to be careful. We're sitting right at 60%. So the bullish the bullish bias from the retail traders is shifting lower. Now, this could easily bounce and go back up. But this one's right at the cusp right now. I mean, it's still, as of right now, this still would be a good trade. But I'd be a little bit more cautious. If this bullish number keeps falling, we get back under 60%, I'd start to be very cautious about that. But for now, not a bad trade. So, all right. So, yeah. So those are the ones I'm looking at right now. And there are all the ones. And like I said, I mean, you can see I've got 20 something, 25, 26 pairs up here. It takes me about, 15 seconds or so, 20 seconds to look at each chart and just make a determination. First thing I do when I refresh the page is I look right here. If I see this number not at least 60-40, I just move on. I don't care what the price action's doing, I just move on. So I got to see at least 60-40, 40-60 on these ratios. If I see that, then I'll look at the chart. I'll look at where price is right now. Is it pulling back? Is it in the middle of an impulsive move? If it's pulling back, then I want to make a note. I'll literally write it down and keep an eye on it. And again, since it's a daily chart, you only have to look basically after the market close, after the daily candle closes, and see where you're at and see if maybe there's an opportunity the next day to start looking for an entry after you get like a sufficient pullback. All right, that's when you're going to go to your shorter time frames and look. All right, if it's already in an impulsive move and there's no entry, then I'll put a watch on it, but I'm not actively jumping into jumping on a moving freight train. You're just going to miss that one, and that's it. Wait for the next pullback. So, all right, and that's it. So you can go through all these pairs in a matter of a few minutes, and that's really all you do. I have these in my Google Chrome browser. I don't use Google Chrome a lot, but the nice thing I like about it is I put them all in a folder. So at the end of the day, what I do is I'll just close Google Chrome entirely. And then when I reopen it, I go in here, I right click on it, I just do open all 29, and it will reopen all 29 of these tabs. And obviously when it reopens them, it's refreshing them to the, to the current price action. All right. So yeah, if we look at like Euro GBP, well, I'm not going to close it all now, but we'll refresh Euro GBP, and you can see, it's down still. So, and Euro GBP is another one to look for shorts, right? We had this nice 2-day pullback, and then boom. So inside of this candle on the 15th was your entry somewhere in here, just like we looked at with whatever that other pair we looked at a little while ago. All right. Inside of this candle is the entry, and then you'd be in this ever since. And again, I can show you another example. Let's go. I think I have I have Euro GBP open. All right, so that high was put in on the 12th of December. So let's go to the daily, and we got to zoom in so I can show you. All right, so this is it right here. You can tell this giant blue candle right here. This is the 12th. And so the very next, so now we'll jump down to a 1 hour chart, and we'll move this over just so here's the peak of that candle on the 12th. Yeah, hold on a second. Am I not looking at the right? Let me see. This is the 16th. Where's the 12th? Oh, I see. I know what's going on here. Okay. Yeah, so what happened was the next day we actually did put in a higher... okay, so it's actually the 15th. Okay, so the peak actually happened because you can see the high on this candle is actually higher than this blue candle, so we have to move that. So where I'm showing this is right. So this is the next day. This was the peak on the 12th, but then on the next day, price continued to go up, and then this was that wick that it shows on the 15th right here, or the 16th on my broker, but it's the 15th on that chart. Okay, so very easy though. Again, you just look at, okay, where's the pullback? Now this has got to be a Sunday candle, this weird looking bullish candle. This is when the market opened. It went down and then up. So you could use this as your structure area because it tapped back in. If not, anywhere basically, this is an hourly chart. So, basically anywhere inside of here is an acceptable zone. All right. So price came down, took out this zone, really right here, fine, no problem. Went down, of course, pulled back into the range right here on this candle, very typical, and then it went down, okay? So that's the next day when we painted that red candle that peaked high over here, and then eventually it worked its way down, and there was your market structure break inside of there. The candle closed lower, and then you could, get into the trade at that point on a structure break, okay? So that's Euro GBP. And so that's the process. Look at the daily chart, find those 60-40 or better ratios, wait for a pullback on the daily chart, at least a couple of candles. Depending on the pair, it might be one, might be two, might be three, whatever. And then all you have to do is go to the shorter time frames and look for market structure changes on, again, between, say, the 15-minute and 1 hour. Kind of mark out those zones. If you can't be in front of your chart, set an alarm on your chart or use an app like I use Forex Alerts or FX Alerts, which is an app on my phone. And you can just set an alarm so you get notified if price breaks it in case you're not in front of your charts. Hopefully it happens when you're at a place where you can look, or hopefully it happens when you're not asleep. But unfortunately, for me, especially a lot of these Euro pairs like Euro GBP, they do happen during the London session. But look, even if it happens during the London session, right? So let's say this alert happened, you put an alert right here and it triggers the alert. Well, price pulled back, so and this happened, this probably happened more during the North American session. So you would have had another opportunity and this is actually a better entry anyways on the pullback. So. Okay, so so that's that on these sentiment alerts. I'm going to continue to follow these, and at least I don't take a lot of trades here because I'm not concentrating exclusively on futures. I mean on Forex. So I try to limit my exposure to just a couple of pairs at a time, and I'm just going to be very patient because again, it's not the only market I trade. So, but the patience is a virtue, and that's absolutely the case when it comes to trading. So, all right, so I will leave it there, guys. Questions, comments, again, leave them down below. I hope that's valuable. This is very, very easy to back test. It's very visual, very simple. So try it out. Just keep those couple of simple rules in mind. It's not hard, and you don't need any indicators on your chart. You don't need any special charts. All you need is that website and your chart, and you're good to go. So. All right, guys, so I'll leave it there. Have a good rest of your day. I am traveling. I'm going to be away for about 10 days, starting later this afternoon. So I probably will be looking at charts and maybe taking some trades, but I probably won't be recording any videos for the next probably 10 days, honestly, unless I really have time. I'm not saying totally I won't, but if I'm away, you know why. I'm traveling for the holidays. And to be honest, next week with being Christmas, the markets are probably going to be really slow. After this week, things probably will quiet down until after the new year, just because of Christmas and New Year's. A lot of the volatility drains out of the market. Not to say there won't be any opportunity, but there will be a lot less volatility and volume in the market after this week. So you're probably not going to be missing much anyways, but I just wanted to let you know. So have a great rest of your day, and I'll catch up soon. Thanks.